Okay, ladies and gentlemen. So you're here with this masterclass session on learning the hybrid system. And it is a question that is asked by a lot of people. How do you learn the hybrid system? Like, there's so much to it. And what this video is going to be about is just bringing you into how you can apply the hybrid system, but what are you going to apply and how you can learn the application of choice in the hybrid system. Now look, when I came across the idea of the hybrid system, where I had two schools of thought being the Steve Mowry Market Maker method and the PVSRA system with Trader at Home, I felt as though that I came to like an epiphany as such. I realized that both of those systems complemented each other massively. From the vector candle that Steve Mowry talks about, to applying that to the big green candlestick in PVSRA. We refer to the vector as the point in the chart where Mr. Market Maker is doing his business. Now, conventional wisdom wouldn't give you that. You would see it as bearish, bullish candle. Now, conventional wisdom does have its place. You see, as much as we have a little bit of a laugh and a joke about the idea of, retail traders have all got it wrong, retail traders are put in a situation where there's a 50-50 chance of a certain play working in their favor. But we want to improve the chance of that 50-50. We want it to be close towards 70, 80%. And the only reason why the hybrid system, in my opinion, and I don't normally say this, but it's a flawless system, is because it factors everything you don't see. 90% of retail trades what they see. But when you start diving into the metagame of trading, through the assistance of the hybrid, you're going to be able to start making sense of what you don't see, and then you'll be able to exploit it. Now, how do you learn the hybrid system? Well, if you look at from my perspective, I spent a lot of time going into various ideas and schools of thought, teaching myself the concept of trading. Check this out. Firstly, let's start off with my bookshelf. I have many more books, but these are the books that I have read. I've read every book apart from the other books that you'll see, like the Thesaurus, the Fact Finder, the dictionary, and the volume and the encyclopedias down below. But any book up there that you see, or when you see in this video, I have read. Okay? So here's a little short video showing you what I went through to understand the game of trading. Okay? So in front of you now, you can see I've got How I Made 2 Million in the Stock Market by Nicholas Darvas. Nicholas Darvas was a dancer who traveled the world and traded at the same time. Now, he didn't have the luxury of digital charts. He only had newspapers. He had the Wall Street Journal. All right? And he would have to wait forever to work out price. He would only have the tape, or for the better word, just the actual numbers of the stock. And he came up with the box theory. I'm sure you may have heard it before, the Darvas boxes. All right? Where the idea of the Darvas box is this. I will show you. The Darvas box principle says that you have price, and hypothetically, you have got a price point which is here as 50. Okay? Let me increase that. Happy days. You have it at 50, all right? Then you also have another price point right here, which tells you it's 45. Now, what Darvas found was when price would stay inside of this zone, okay, he would be patient and be waiting to see the relationship of what was going on inside of this box. And as you can see, price would stay like this. Whenever he saw that price started to trade away from the box or the zone, okay, he would make his trades on that principle. All right. And then when price would consolidate yet again, he would have another box where he would see at this point, we would have 51, for example. And then we would have down here 49. Okay. And again, the same story applied. All right. And that's exactly what he did. He only had price. And in his mind, he would plot on the charts, a piece of paper. He would plot the charts, literally get a chart itself, mark off like so on graph paper. And he would plot the prices on the axis. And he would then start 1, 2, 3, 4. He would plot. And through this plotting, he came up with the idea of the Darvas boxes, where if price broke above it, he would go long. If price broke below it, he would go short. Okay? And that's what Darvas did. All right? Now, you want to check that book out? Go and get it. Happy days. We got Understanding Price Action with Forex. Now, you will see through my books what I went through. I went from swing traders to position traders to being mathematically based, where we've got book on derivatives. Okay? We've got corporate financial management, where we're diving deeper into the way corporate companies use economic theories to manage risk. Then you have investment portfolio management itself. And this is where you are taking conventional wisdom of economics and trying to put it into your trading. We then go into other books as well, such as Trading Price Action, William J. O'Neill, my years of experiencing the stock market, because that's where I started. You also have The Market Wizards. This is a very good book. And my guy Douglas, look how faded that looks, man. I brought this book when it was black like this. And over time, because I've been using it and reading it so often, it's in that zone right there. That's my best book. Okay, we're going on the top shelf. We now have Steve Nissen's Japanese Candlesticks. Okay, we have this guy, Derek Hobbs. All right, which Fibonacci for the active trader. Profit Magic of Stock Transaction Timing, J.M. Hurst. This is an unbelievable book. This book, Talk Analysis, is so complex. You would not believe it. How Garrett himself come up with the ideas of cycles, geometrical cycles, seasons, astrology, and he bases his information on the power of a move. Well, what do we understand as a move that's powerful? We understand it to be the vectors. Reminiscence of a Stock Operator, my guy Jesse Livermore. Fibonacci ratios with pattern recognition. Okay. Then we have like this conventional book here, The Witch Book of Saving and Investing. We also have Trade Like a Stock Market Wizard, Day One Trader, mad book. This was a book based on pit traders. And this is where the joke come, where you may have heard me say in the past about this book, where a couple of guys inside of here were on the pits. And one guy says to the other, hey bro, why are you so fat? And he goes, because every time I see your missus, she gives me a bacon sandwich. Obviously, I can't say the words that I want to say, but you can imagine the kind of banter that happens inside of this, okay? We have The Mental Game of Poker, The Mind of Wall Street. I got this book twice because I like to take notes and write in one and then have one as a decent copy. How to Make Money in Stocks, J. O'Neill again. The Successful Investor, Mastering the Trade, Carter. These are all my journals. These are all filled. All right? Times where I've lost money, times where I've just written inside of here and just broke down my mindset of what's going on in my trading. Why am I losing so much? You know? I had this red book. And this red book was the book of losses, filled with stories in my mind about why did you behave like this, Tino? Why did you take the risk? Why did you not pay yourself? This book is the Pay Yourself, the lessons of paying yourself. And this is a book that I just kept on writing in it. And I found that the more I wrote inside this book, the less chance I had at succeeding in this game. And it was only when I started to write in this book, the little brown book, this brown book right here, where I would write my successes. And I started to train my mind into saying to myself, I want to be writing more in this book than I do in this book. I want to be able to come to this red book right here and say to myself, I need to write down the lesson I learned today and my loss. So it then started to change. I started to write in this book lessons that I was happy to take. Lessons that I learned on why I felt emotional. Why did I not pay myself on that gap? Why did I not take that candle trade? Why did I not pay myself at this instance? What could I learn about this? This book ended up being a frustrating book to write in, but then it also became one of the best books of my mindset when I was learning how to overcome the mentality and the self-sabotage that I was experiencing in my trading. These little blue and red books right here would be my positive trades and my negative trades. I would have them both on my desk when I was day trading, and I would write down, I'd mark it off and have wins, losses, break-evens. And back in the day in the stock market, they used to hold little books and they used to have tickets. And I was mimicking the idea of having this as my ticket book. All right. So if I banked a profit, I'd write it in my little book. Banked a loss, write it in my little book. And when I was away from the charts, I would take these two little books with me and review my successes and my losses. Okay. Then we go further down to a little bit of other reading. Obviously, we got Bruce Lee and the Handbook of Sustainability and what have you. Art of War. There's the encyclopedias of stuff. I, Claudius, Top Boy Read. Those are the tarot cards from TradingView, limited edition. Those were kind of cool. But the question is, do you need to read all of these books to understand the game of trading? Is it a requirement? It helps to have books on your shelf that show you various schools of thought, which then will lead you into the idea of how you can learn the hybrid system. Now, going back into the slides itself, time. What can you do with your time? Because everyone is in the idea that you need time to learn to trade. But what about learning concepts of trading? How do you do that? Now, you can jump in at the deep end, something that I did, which if you are prepared to pay the price for learning and jumping at the deep end, then do not be discouraged when you start paying a little bit more than you had anticipated. You need to separate your time. You need to say to yourself, for 1 week, I'm going to study everything about a specific strategy in the hybrid system. So let's do that right now. Let's go to the charts and let's pull up something and let's get rid of all of our indicators right here. Let's get rid of all the notes and what have you. And let's pull off one concept of the hybrid system. So let's say we want to trade deviations away from the moving average. Okay. Now, this is going to lead into the idea of repetition and exercises. So I'm going to be killing 3 birds with 1 stone with what I'm going to talk about right now. So let's say we want to learn about the hybrid system and purely the vector candles, okay? And we want to apply that in relation to the moving average. So if you're just going to trade off moving averages, you need to pick the time frame that you are suitable to work with. So if you want to work it around your everyday life, and if you do have a job where you're going from 9 to 5, well, your time frame will be from 6 till 11. Okay? So those 5 hours, you can come home, you can spend time with your children, you can spend time with the wife, you can even chuck in a film. which will then take you to about 10 o'clock, and then you dedicate an hour to trading. Inside of that hour, you have to be methodical and say, I'm only going to look for vector candles that are green on the 1 hour time frame, for example. And what can I learn from that? So this is what I used to do. I wanted to understand holistically the variations of the green vector candle. What did they do afterwards? It's easy for me to say to you, yeah, bro, just literally highlight this, highlight this, highlight this. Okay? That's nothing. That's just a visual exercise. That's BS. But what you'll find, ladies and gentlemen, is if you focus on one thing of the hybrid, and in this instance, the vector candles, the green ones, you'll start to pick up some things. You'll start to understand that the longer the candlestick and then it doesn't follow through with anything else, you don't really see that much of an impactful move afterwards. That would be this area here. You start seeing more than one green vector candle, you kind of sense that there's something brewing and then they will continue with a move up. You'll then start to understand how often do they retrace the green vector candle, whether it's after one vector, 2 or 3. So you're then marking that off. You're saying, okay, I'm going to pay attention to this sort of thing right here. 1, 2, 3 green vector candles, they came back into those candlesticks. We got one green vector candle and we have a blue vector candle right here. How have they behaved inside of this zone? Take a screenshot. Pay attention to it. See another green vector candle. What did they do after that? What move did it lead into? What was the environment like? Where are the vectors? Where do I see green vector candles that show me the presence of market maker where he's trying to trap traders? Notice how you've got the collection of these vector candles up here. So you start diving into these candlesticks and you start saying to yourself, I'm starting to build a picture in my mind. If I just say to you now, do this with me, focus only on the green vector candles. As I go through the chart, you're going to start being aware of certain things in your mind. Something's going to trigger and you're going to say to yourself, shit, it makes sense. I noticed something about every time a green vector candles, what is it that you see? It's always ending up getting recovered, whether the move is big or not. It always ends up moving away. And if I see green vector candles appearing after each other, after there is a period in the chart where price doesn't show vectors, I'm starting to understand that Mr. Market Maker may be preparing for other moves. It's funny, isn't it? The same candlesticks that we're looking at right now are potentially preparing for reversals. It's a crazy story. Now what you'll find is that when you start marking off all of these green vector candles and keep doing it, I'm telling you, keep doing this sort of thing. Mark off all the green vectors because it's an action. And inside of your mind, you're then saying to yourself, okay then, what have I learned after highlighting 350 green vector candles? Itemize it. How many green vector candles did you find that showed a price movement of around $800? What's the average length of each vector candle? This is the question. How far are you going to go to absorb the idea of every single move that happens in the chart? How often are you going to train your eyes to understand this? Because I'm telling you, the hybrid system is about repetition because you're looking at the same thing over and over again, but differently. It's going to be a different way. Take each green vector candle, spend 1 hour, time yourself and go back in the chart and just keep on highlighting the vector candle's length. What happens afterwards? You see a vector candle, a $579 move, usually on average is going to lead to, maybe, potentially, a continuation of a $800 move. I know there are guys out there that will do those stats. Mike G, my guy, how about I give you another incentive? Check this out. Pull up as many green vector candles, maybe a sample size of 100, 250 vector candles, and come back to me and tell me what is the average price movement away from that green vector candle. Now you'll say to yourself, okay, how am I going to do that? Well, if we do it based on one vector candle or do we do it on a succession of vector candles? So do we base it on 1 to 2 or 2 to 3? Mike G's the kind of guy that would put that information together. He's done it before where he's shown you that Excel sheet. Look at this. Mike G has decided to compile up the actual price points from each session. He's done a whole month where he's shown the percentages of stop hunts. Everything is inside of this. Okay? Bitcoin all sessions. Just look at this. All right? This is data. And if the principle says that they repeat things over and over again, then you're going to understand that you're going to be able to exploit that. Look, man, just pull up any point in the chart. You're going to see the same thing. Red vector candle, blue vector candle, green vector candle, deviation away from the moving average, back into the moving average. Is it starting to get easier to understand how to learn this? You may be putting pressure on yourself to learn it. If you start feeling the pressure to learn, you ain't going to learn nothing moving forward. And I'm being straight with you. Because you're then going to be forcing information. You're going to be basing it emotionally. And you ain't going to be really diving into it. So all I'm saying to you, going back into the idea of time, repetition, okay? You need to give yourself the chance to holistically absorb one aspect of the hybrid at a time. Take something, apply it. This is why I love Forex, guys. Because Forex lets me trade Monday to Friday, and then Saturday and Sunday, I am free to do whatever it is I like. I can come to the charts and relax. I'm not feeling like I'm missing out on an opportunity. Crypto doesn't give you that luxury. Crypto makes you test the idea of discipline. Can you come away from the charts at the weekend, even though it's the most volatile? Who says volatility is a good thing? Volatility is great when you know what you're doing, but it's terrible for the retail trader who has no idea what he's getting involved in. You're putting a lot of effort into it, guys, and I know you are. You're all trying to learn this system. I'm going to give you a few tricks that are going to improve the chances of you understanding it. Some of you have no idea about candlesticks. It would help to go and find out what a candlestick is. Google it. What is a candlestick? And it will literally show you the high, the low, and the body. All right? Now, it's how the candlestick develops, which is where we start to understand how things are a little bit different. For example, you see these two candlesticks as bullish candlesticks. They are trading stronger. You see the wicks. The wicks are where Mr. Market Maker is getting traders trapped, getting their orders filled, spiking lower, liquidating them, moving up. People call these rejections. They ain't rejections, ladies and gentlemen. They are adverts. They are adverts in the chart where Mr. Market Maker has an interest to trap traders. And you want to play the exercise game again? Okay then. Get yourself a little brush and mark off for every wick that you see. Look right and tell me if it's recovered. Happy days. Happy days. The bigger the wick, the more chance it's going to look to get recovered. Keep doing this exercise. And when you start doing this exercise, you're going to keep seeing and noticing something. After you do it several times, you'll say to yourself, shit, man, I'm seeing the same thing over and over again. What is this game about? Look what we just did here, guys. This area here. Tell me why that's no different to this area. Tell me why it's no different to this area. Why is it no different to this area? Why is it no different to this area? Why is it no different to this area or this area or this area? It's all the same thing, guys. When you make it obvious to yourself through the practice of repetition, when you say, today is Saturday, I'm going to find stopping volume candles. Okay, let's go in the chart and search for stopping volume candles, ladies and gentlemen. Let's start with the 1 hour time frame or the 15-minute time frame, and we're going to play our game of stopping volume. Okay, then, so here we go. Stopping volume candle 1 right there. Okay, then, cool. There's only one in that zone. Oh, I see another one right here. There's one zone right there. Okay, that's good for me. All right, I'm going to go across. Do I see any more? Yeah, I can see a couple of more. I can see, okay, there's a stopping volume candle right there. And they've got that wick that matches back up again. Okay, I'm cool with that. No more stopping volume candles. Okay, yeah, I see another stopping volume candle right here. That's fine. Let's keep going. Okay, we've got some more stopping volume candles right here. And through this practice, you'll start noticing that every time you start highlighting them, you'll start to understand what is going on afterwards. And when you keep on doing this exercise, go back in the charts and highlight each one. You are programming your mind to have an imprint in there so that when you do see a stopping volume candle, you'll then know that there's going to be an outcome to it. You can see that there, right? So now we've got any more stopping volume? We've got, I won't say that's a stopping volume candle. Let's go into something. Yeah, okay, we'll go with this one, stopping volume candle right here. Nice little one right there. Cool. We've got a couple right here. Okay. Then go back in the chart. Start again. And then you start annotating. What happened at this stopping volume candle? 50 EMA is trading lower. 5 and 13 is trading lower as well. We've got to see the pushes of price down lower. The stopping volume candle comes up, recovers the 50 EMA, and then it trades sideways. Look at the time that we're in. We're in Sydney, Hong Kong, and then the UK Brink session comes in, stop hunt rise, and then they collapse price to the downside. Okay, so I'm starting to understand the stopping volume candle when it's appearing at the lows could be a short-term retrace back up to stop allowing traders to open shorts, or the trap of the shorts has been achieved and they don't want to inflate the market too much with shorts at that point in time, so they reverse it back up, consolidate, and then make those traders feeling consistent on the idea that they may be feeling that price is going to come back up again for them to only drop it back down again. Look what they did with that stopping volume candle. They did exactly the same thing. Stopped it from actually going lower. They spiked price higher, come back and recover the shorts, liquidations, and then they bled price to the downside. What about this area right here? You see a stopping volume candle right here, which was met before with another candlestick, which could have finished lower. It turned into a violet vector. They retraced back up into that 5 and 13 EMA. They found resistance, and then they came back. Oh, did we not just talk about the idea of wicks? Happy days. So you could look at that stopping volume candle. Remember, stopping volume candle is a point in the chart where the market wants to stop price from continuing one direction, where they transact lots of volume at that point in time. Let's go over here. Same story. They've been marking price down lower. An aggressive move down. The violet vector candle comes in. Then the stopping volume candle comes in at the same time. Volume is starting to rise. Mr. Market Maker is holding the range. He doesn't want to go down there yet. Hold on a second. Did we not just talk about wicks? There's the recovery of the wick. Cool. So you now know that when you see a stopping volume candle like this and there is a wick, you'll know that price is likely to come back into it. Where did we see that before, ladies and gentlemen? Look, this was on the 5th of May. Where have we seen that before? Okay, let me just show you right now. Here we go. You know exactly where I'm going with this, guys. You know exactly where I'm going with this. Check this out. 5-minute time frame. Good old BTC. I ain't saying anything, ladies and gentlemen. I ain't saying anything. Yeah? I am not going to say a single word to you with what we've just done right there. Okay? I'm going to keep going back. Where is it? We were just talking about it. June. Here we are. Where is it? 5th of May. Surely it can go back from there. Okay then. Maybe not. There we go. June. Fifth of May, there's one wick right there. Not the wick that I wanted. I said the 5th of June, didn't I? Yes. There we go. And this is on the 15-minute time frame. We had the hourly on before. But you see the principle. Yeah? Happened on the 5-minute. but graphically you would be aware of it because you know it's a stopping volume candle. Yeah? You know that they are going to come back into that zone because the principle says at that point in time, they wanted to stop the flow of liquidity at that point for the time being. Reversed it. Then look at what happens when they come back into it. They're selling aggressively from it. Would you have been aware of that, ladies and gentlemen, had we not done this exercise? Look at this one. Another stopping volume candle. Sharply reduced, reverses back up, brings it back down. So with this understanding, ladies and gentlemen, of time, repetition, and the exercises themselves, don't put too much pressure on yourself to learn absolutely everything about the hybrid system. I mean, look, man, we have got a wonderful community here. Check this out. This is a list of the PDFs, and it's not all of them. It's just the ones that I've managed to pull together. Contributions by Mike G, G-Unit, Lars, Recovering Moon Boy. They have spent their time, and myself. Here's my first one, the 8 Rules PDF. Yeah? These are the 8 rules. And there is a concept behind each one. Always accept uncertainty. You'll never determine the end of a move. Take whatever's given to you. Always determine your risk. Trade light. Be loyal to your stops. Aim for accurate entries, not perfect ones. Always protect your profits. Do not underestimate this rule. Give your methodology a chance to succeed. Final words. 8 rules. Read them. There's a video on the channel that talks about it. The next one. Contribution by my guy, Mike G. Indices and correlations. Up, down. Look at the effort my guy's gone into. He's even gone to the white and the black to make it easier for viewing. There's the EMA correlations. These will give you the tools, help you how to utilize the tools. Masterclass by G-Unit. Look at the extensive knowledge here. This guy just watched the masterclass. Okay? Advancing your scalping. Same guy. Read it. Get through these. Go over them over the weekend because G-Unit, he came and he didn't know what the hybrid system was. And look at this. This is taking information that I'm talking about. What the V-Play taught me by Lars. He makes reference to the idea of the masterclasses before you even attempt. Masterclass 37, Masterclass 30, Masterclass 9. Remember I said to you, the masterclasses are not a start to finish. They are reference points. Not to overlook. No order. 44, 43, 42, 27, and 7. 17, 21, 22, 34, 39, 40. Yeah? What does Lars look for? He goes into it. These are V-shaped plays. The hybrid pattern. Index, weekly, environment, structure. Here is the visual exercises that you can go through. You know this pattern. Go back into the charts and try and find this pattern. Draw it out. Spend a whole day drawing this cycle. And I promise you, ladies and gentlemen, let me do it now for you. I'm going to get serious with you guys. Look. Go on the 15-minute time frame. Try and find the structure. Okay? Wherever you decide to find it. Let's start with this. Okay? Let's get rid of that. And let's start doing it. Remember, look at the exercises that I just did right now, yeah? So, M, level 1, drop, level 2. You could say it's level 1 drop, and then the drop level 2. Then it went straight into a peak formation, rise up, level 1. Okay? And then, yeah, so small W formation down there, rise up, level 1, rise up, level 2. But it came straight back down, so I'm not going to count that because it's this. Rise up, level 3, M formation. Drop, level 1, retrace, and then they took a nosedive to the downside, bang, extension, okay? And as you keep going by, you'll then start to understand that. How long do the patterns actually last for? How long are the cycles going to come into play? All right? oh, maybe what about if I see this one? Okay, so we've got a pattern right here. We've got a drop, and then we've got a sharp drop lower. So with the sharp drop, we would naturally anticipate a retrace back up. Here we go. Rise level 1, retrace. Rise up level 2, retrace. Rise up level 3, retrace sharply back into the range. Stop hunt rise, and then they formulate the structure again. Drop level 1, drop level 2, drop level 3. And then they continue peak formation. It rises up, but 50 EMA rejection. We've got some vector candles down here in the range. It might not last long. Extension to the downside. And, oh, okay, then we've got the structure. You see what I'm saying? Go and spend your weekends doing this. Train your eyes, because I promise you, you're going to see there is going to be differences in the way you trade after that. I'm telling you. Oh, look at that. There's that recovery of that wick yet again. We just went through that, ladies and gentlemen. Oh, there it is. Look at these green vector candles. I keep on marking these green vector candles, and they keep on appearing at the highest point in the chart. And it always ends up reversing. Oh, there we go. Again, the same shit. 1, 2, 1, 2, 1, 2, 3. There's always going to be a reaction after the vector candle appears. Again, back to the idea of time, repetition, the exercises. Because the one thing that you guys haven't got is the problem that I had before. The problem of habit. The problem of doing the same thing wrong and being good at it. I didn't know what to look for, ladies and gentlemen. I didn't know about PVSRA before. All I had was this boring, basic candlestick stuff. I knew something was missing. I just didn't trust the idea that I would draw off a structure like this and then anticipate it. I'll be straight with you guys. I never looked at candle chart patterns. Never. I didn't like the idea of trading these wedges. I never paid any attention to them. Never paid attention to anything like harmonics. Didn't pay attention to the Fibonacci's. I got books up there that are like the Fibonacci for the Active Trader. That's a £300 book, ladies and gentlemen. You can't get that book anymore. Any new editions, I don't know if you can, but from Derek Hobbs, go find that book. If you can find it cheaper than £300, happy days. But when that book first came out, it was £300, sorry. Expensive books because it was Fibonacci and everyone was kicking ass about Fibonacci. I didn't like it. I knew something was missing. And that's when we came into the hybrid, not the hybrid, but that's when we came into the idea of the market makers. What made it move? I just wasn't satisfied that it was just institutional traders. Then they said market makers. I was like, who on earth is that? Then we started going into the rabbit hole. Then we started to understand that things are a little bit different. From that point of trying to work out who the market maker was I found that the market maker guys would never really talk about patterns. When I say patterns, I'm talking bull flags, bear flags, and all the other Super Mario stuff. No discredit to you guys that trade them, but understand it from my perspective from back in the day when I was learning. I was looking at these structures and it was BS to me. Why? Because it didn't work for me. I wanted more. I wanted more behind the understanding of the candlestick. Why is it every time I opened a trade on a bullish candle, it reversed? That's what got me. That's what made me think something's wrong here, man. Surely something is different. Why is it when I go long, price was always reversing? That's when we came into the understanding of the market maker. That's when I started diving a little bit deeper. But I was executing a habit that was bad for a long time. You guys are at an advantage because I'm helping you cut through all that shit. Any bad habits that you have are programmed by you. Like they were programmed by myself. If you are struggling with risk management, completely cut exposure. You need to get used to the idea of not trading for money. When you start wanting to trade for the sweet science. Yeah? In my scalps yesterday, I don't need a big move to make money, ladies and gentlemen. That's the level of scalping that I'm at. That was my goal. I only need a small move to make myself a great return. I like the idea of only being in for a short amount of time and making the most amount of money. I like that. And even if price does continue higher, so what? It took me a long time to detach from the idea of missing out on a move. I didn't give a shit now. Don't care. I literally have no interest. Even if it does continue in my favor, it just solidifies at that point in time I was right. And I'm cool with that because I took something off the table. And even though it continued to move up, in my heart, I know that I was right. And the market is just giving me a great reason to solidify the understanding of my trade. It makes me happy. I don't need to make more money to demonstrate my understanding and accuracy of a move. I already did it with the scalp. That's why you see me building scalps. In the market maker tier, you see me playing scalps. I build at like 1, 2, 3 positions, and then you see price move up and then it reverses. But I'm already out of the trade. Here's an example. Here is the video. This was shared to the market maker tier where I scalped NASDAQ and Aussie yen. Here are my scalps. Now, I could have opened my scalps here and could have rode this whole move, and they even continued to go even higher from that point. But what's the point, man? I didn't know it was going to go higher. All I saw was I took a trade, exploited it, paid myself once, twice. Opened another trade on the retrace. The average price was closing higher as it was going lower. Gave me an understanding that price was going to go up again. Took my trades, scaled in, building my longs from the lowest possible point, selling at the highest possible point at that point in time, banking profits. 1, 2, 3 correct trades. Happy days. And then one more, highest point, sold it, done. NASDAQ did exactly the same thing. Averaged my entries lower. Saw a bit of success on that move. 3 trades, 3 positive trades. Happy days. 1, 2, 3, 4, 5, 6, 7, 8, 9 out of 9. I'm happy with that, man. The old Tino would have held this trade, would have held these and added more and be losing money left, right, and center. I found that 73% of a sample size of trades, it was roughly about 2,000 trades, 3,000 trades. I found that 73% of those trades were in profit before they were a loss. That crushed my soul. I hated myself for it because the expected value would have made me a multi-billionaire. If I had closed every single trade that was in a good profit, if I had closed it, I would be sitting on mad liquidity. Elon papers, ladies and gentlemen. But obviously that's not the case. Purely through the principle of compounded interest, you understand the game. But I didn't do that. I was greedy. The size I was using before, it was mad size, guys. I have no boundaries to risk. And that's what the bad habit was. I was programming myself to be good at something that was bad because I never saw the idea of being good at something that was good for me. I just wasn't there. I just thought it was all part of the game. But to have 73% of your trades were in profit before they were a loss? Man. Come on, man. That does something to you, man. And it was at that point I realized that I was wrong. I was doing something wrong. Depositing 10 grand every fucking time, man. And it was just going. I've said this before, my fastest deposit to loss, that means wiping it out. Took me 2 hours to blow 10K on one trade. I deposited 2 o'clock in the afternoon, New York Open, and by 4 o'clock in the afternoon, it was gone. Closed my laptop calmly, and I went for a very long walk. I thought after that walk I would come back and I would see things differently. Nope. Did it again. Put another 10 grand in. It took me a little longer this time. I turned that 10 grand into 25. Lost it all. Kept on depositing. I kept on understanding something. Every time I deposited, I would flip the account. So then I said to myself, hold on a sec. Why don't I just start getting good at paying myself? Cut my losses, pay myself, and see what happens. And then that's when you start seeing the growth. Then you start, every time you put 10 grand in, you make 1,000, pay yourself, take it, put it in the bag. And then I started to get into the idea of not focusing on money because I was too emotional. I was always looking at the balance. Yeah, man, I'm moving up. No, I can easy triple my account now. Nah, man. It was when I started getting used to the idea of focusing on the execution of the trade where I said to myself, okay, something needs to change. I know I can exploit the markets. I need to make it systematic and objective. Forget the money. Check what you've made at the end of the week. Then you have an understanding of where you are. Now, for me, my trading right now, ladies and gentlemen, I need to try and fit in as much trading as possible. Times that I'm not streaming, I'm actively trying to trade. I'm also trying to get projections from my daughter. That's how bad it's got. I need her help. But jokes aside, ladies and gentlemen, when it comes to you trying to understand how to use the hybrid system, find your time. It's repetition. Do the exercises. But try your hardest to not develop the habit of being good at something bad. Because this was the problem that I had. I was good at losing a lot of money. And the only way around it was if I then programmed and trained my eyes to be aware of something that would repeat itself in the chart. Ladies and gentlemen, in this post of the masterclass session itself, I will be putting up all of these PDFs, okay, that have been contributed by so many people in the Patreon itself. Look at the effort that people go to. They do it for their own learning. They do it for their own learning so that they can then, I've checked all of these, all right? And they got all my approval. Because no one is right, no one is wrong. Yeah? Check these out. Use the weekend to go over them, guys. Don't force yourself to trade because everyone's trading. Nah, man, you don't know what everyone's schedule's like. You might have children. They may not. The time that they're trading may be the time that you don't have children. Weekends, during the week. Comparison is a depressive thing. Don't watch no one. Watch yourself. You are not interested in what other people do. You are only interested in what you do. Trading is your own responsibility. The only way that you can truly learn the hybrid system, ladies and gentlemen, is if you give yourself a chance to actually succeed at learning how it moves. You know the system. Guys, I'm telling you, I've saved you nearly 7 years of bullshit. Do you understand that? I've saved you a very long time reading all of this stuff. Not one book inside of here talks about market makers, except, I'll show you in a second. Wait for it. Look at all these beautiful books here, yeah? Just pay attention. All these books. And you'll think that they're going to mention something. But you see these white papers right here? These are the only things that talk about market makers. Funny, isn't it? Thousands of pounds worth of books. And everything that I need is in these documents here. Ladies and gentlemen, I hope you've understood what I've tried to convey here. This may not be the conventional how to learn the hybrid system, but everything that I've discussed in this video is a good head start, man. If you are new to the hybrid system completely, you've got the website. Start off in the short section, okay? Go through all of this stuff. Then make your way over to the masterclasses, all right? Use the strategy of exercise that I said to you. Mark off all the green vector candles. Mark off all the blue vector candles. That's your homework today, ladies and gentlemen. All of you. I want you to get a spreadsheet, okay? Get yourself a spreadsheet, mark it off, and put down green vector candles, red vector candles, violet vector candles, blue vector candles. Okay? Do the 15-minute time frame, do the 1 hour time frame, whatever it is you want it to be. Okay? Then, once you've gone through the chart, you write down what common themes you found with the green vector candle. What common themes you found with the blue vector candle? What common themes did you find with the red vector candle? What common themes did you find with the violet vector candle? And you've got yourself some data. Do exactly the same thing, ladies and gentlemen. Change it to green stopping volume candles, blue stopping volume candles, red stopping volume candles, violet stopping volume candles. Mix it, match. Mix and match it up, sorry. Explore stopping volume candles below moving averages, stopping volume candles above moving averages. I promise you, when you do this exercise, it's exactly what I did. I was obsessive about it. I said, I ain't going to trade. No, I want to learn this because I know if I learn it, I'm going to get it. And I'm going to train my eyes to see the same shit happen over and over again. And then all I need to do is just time my entries where I can call back in the past where I'd seen green vector candles appearing based on the stats that I developed from it, where I understood that if I start seeing on average, I have found that if I see more than 2 green vector candles appearing above the 50 EMA and prices deviated away from the 50 EMA, I'm expecting them to come back down and recover those candles if they haven't recovered them sooner. Look at the chart. It shows it you. This is the 13th of April. Just go back to another set. Here we go. Green vector candles. 1, 2, 3. They're coming back to it. The smaller the deviation, the less likely you're going to get a bigger move. Bigger deviations, more likely of a bigger move. Let's go back. Here we go. Green vector candle. Push, push, push. No recovery. Happy days. Run your shorts. Rejection at the 200 EMA. Go and find that strategy. Go find that structure in the charts. Off you go. Go for it. Where can you see it? Here we go. We've got a nice little move right here. Happy days. They've done it. Deviation away from the 50 EMA back into the 200. Cool. Next. Keep going. Here we go. We got another one right here. Guys, unless you start seeing something differently happening inside of the vector candles, the game itself is repetition. There's nothing else to it. Do not put pressure on yourself to trade all the time. Find time to do this exercise. This is what makes you train your eyes to see it. Ladies and gentlemen, I hope you've enjoyed it and the message is loud and clear. Mad love and respect. Peace.